If you really want to know how a business truly operates behind the scenes, whether a business is good or bad, you need to look at its taxes. I think tax is one of the best indicators you can have of whether a business is doing the right thing or not doing the right thing, whether it's being responsible or not being responsible.
This is the Changing the Narrative podcast. I'm Chris King, and in each episode, I sit down with someone who's actively participated in helping build a different way of running things, be it an economy, an organization, or a community. The aim is to understand how these alternatives to the dominant systems can work in practice, not just the theory of it, but the reality on the ground. You'll most likely have seen labels such as Fairtrade on the coffee you buy, organic on the eggs, and the living wage badge in the window of some of the shops you go to. Marks that tell you that a business is doing right by someone. For years, there was no equivalent for the thing that actually pays for schools, hospitals, and roads. In other words, tax. So, the Fair Tax Foundation created one. Its Fair Tax mark, the first accreditation of its kind in the world, certifies that a company pays the right amount of tax in the right place at the right time. A business applies for it and opens its books to independent scrutiny. Falling short doesn't have to mean rejection. The foundation can work with companies to help them reach the standard. What it won't certify is tax avoidance of any kind, the artificial arrangements that keep to the letter of the law but not its spirit. The work the foundation does is not about exposing the dodgers, it's about celebrating the businesses getting it right and helping those who want to ensure that they too are paying the correct, fair amount of tax. My guests this week are Paul Monaghan, Chief Executive and Co-founder of the Fair Tax Foundation, and Jamie Boswell, its Head of Accreditation. We get into why celebrating the good guys might do more than naming the bad ones. Why the idea that tax dodging is mainly a big corporate problem turns out to be only half the story. And what a company's tax reveals about the kind of company and citizen it really is. Here's Paul and Jamie. Enjoy. If you wouldn't mind just introducing yourselves and how you came into this work.
So, Paul Monaghan, I'm the Chief Executive of the Fair Tax Foundation, and I helped co-found it back in 2014. And at the time, there was very little mainstream discussion going on about tax. And my background was in various environmental and governance accreditation schemes. And you couldn't move for accreditation schemes such as Fairtrade or living wage or organics or forestry stewardship council or marine stewardship council. And the one issue that no one would really touch at the time was tax for two reasons. One was that everybody thought it was so complex, the most complex thing in the world. Only tax professionals get to discuss it. And secondly, it was considered high risk. Back then, there was a belief that if you alleged tax avoidance, it might be libelous. And it isn't. And people have grasped now that it isn't. Obviously, if you allege tax evasion, that's very different because that's a criminal offence. But alleging tax avoidance isn't. And it was when some brave journalists from Reuters, etc., started talking about what Starbucks was doing as aggressive tax avoidance, and the roof didn't cave in. It opened up a whole space for discussion. So I've been in this for about 10, 12 years now. And Jamie, and part of it was recruiting Jamie into the team from his tax background.
Yeah, so I'm basically ex-accountant, ex-tax advisor. Yeah, working on the dark side, helping people minimize the tax for loads and loads of years. Didn't really feel that good. And then moved over to the Fair Tax Foundation about 5-6 years ago now. So I'm the head of accreditation there at the minute.
So it basically means like if a business wants to get the fair tax mark stamp to say that it is a fair taxpayer, it's Jamie and his team crawl all through the accounts and have all the discussions and say, well, this is great, but you need to do this, this, and this as well. Or hang on a minute, there's a number here. I'm not quite too sure about that. Explain it to me, please. That's Jamie and his team of professionals.
Okay. Do you feel, Jamie, that it was a good move going from the dark side?
100%. There's obviously this ample amounts of accountant and tax advisors out there that are doing this kind of work. Obviously, most of them are doing the right thing and, trying to make their clients compliant with the law, the letter of the law and things and spirit of the law. But there's many rogue tax advisors out there as well that are doing damage. And there's not enough people, I would say, on our side that is trying to change the narrative on tax and how, important responsible tax conduct is and what it gives back to the communities and things. And so, yeah, I used to work in accountancy and tax, and I used to leave at the end of the day, not feeling particularly very good, very stressed, and same old line, make my tax bill nil or I'll go elsewhere, that kind of stuff. And now it's totally different. It's all about celebrating, supporting, rewarding, doing really important work, giving back to the communities, getting involved with other NGOs, like-minded NGOs, even the government and things like that. It's so rewarding now. It's totally different.
And I think this is what's quite interesting for your viewers, maybe, or your listeners, which is that, somebody like Jamie could earn far more money out there than he'll earn for us. So I'll say he won't say, he's brilliant at doing what he does, and he could earn more money out there. And I think in all the countries where organisations like us and tax have made real headway and changed the public discourse and got businesses on board, because it's quite crucial. You can't do this without bringing business on board. It's because people have come from the accountancy and the tax profession and they jumped over the fence. Because at the end of the day, somebody like me, who's, let's say, a gifted amateur, he's the one with the chartered tax qualifications. Other people in the team are the chartered accountants. They know the detail, and the detail really matters with tax. The detail is is the difference between tax avoidance and tax evasion, and tax avoidance and genuine vanilla, fantastically okay tax planning. It's the detail. And that's why, as well as the people who are really concerned and are well motivated on this, you do need professionals as well, like Jamie and his team.
Oh, absolutely. What would your average kind of week look like in terms of both trying to raise awareness and an understanding of why an organization would want to obtain the fair tax mark, and then also that process of getting them that accreditation?
Do you want to go first on this one?
So my role in particular, so I'm the head of accreditation. I get involved in all sorts of stuff. My role is no 2 days are the same. So, but my bread and butter is basically making sure that the certifications run robustly and smoothly and effectively. But other than that, I'm involved in like training staff, networking with other NGOs, assessing myself, getting involved in podcasts and webinars like this, attending events, research, lots and lots of research. Yeah, a wide variety of work. It's not just go in the office and do a few tax returns and then go home. It's entertaining.
I mean, so what our businesses say to us is that if we do a couple of bad accreditations, they could walk because the brand would be tarnished, and that they would then be hurt by that as well. And touch wood, over a decade, we've never done one bad accreditation, by which I mean it's never been the case that we've accredited someone and other people have looked at that business and gone, whoa, they got that wrong. They don't know what they're doing. That's never happened. And that's because of the diligence of Jamie and his team. One of the tensions we do probably have is the tension between what Jamie calls the bread and butter. We're working with businesses, we're accrediting their accounts, we're relicensing them, we're shouting about them with the public, we're trying to draw attention to them because that's where our role largely is to celebrate the good guys, not to out the bad guys. However, what tends to be on a Monday morning, the first call that comes in on the Monday morning is a journalist who wants us to help exposing a bad guy normally. And they want it for free, and they want it within 3 hours because it's all very important. And we have to regulate ourselves to a degree, which is we can do some of that. We can do a bit of that. We can help out, and we do. But at the same time, there's many other people who do that. And what makes us unique is that we're the people who are prepared to look at the detail and actually say, this business is paying the right amount of tax in the right place at the right time, and it may not even be paying tax because actually they shouldn't be being taxed in that jurisdiction because they're not actually raising any profit there, and they should be taxed in this jurisdiction because they're actually generating economic value. And sometimes people don't want to hear that. We've had many a journalist who've come to us with a scoop and go, oh, I've got this scoop, do you want to be involved? And we go through the numbers and we go, you haven't got anything. They're not paying tax because they've got carried forward losses from previous years, which is entirely legitimate for why they're not paying tax even though they're making a profit. You haven't got a scoop. And it's like, well, I don't want to hear that. I'll go and find somebody else who tells me I've got a scoop. So there's a little bit of tough love sometimes with the journalistic community on this. Having said which, other times they'll come to us and look at this scoop and we'll go, whoa, that is a scoop. Those numbers are absolutely astonishing. And so we broke a bit of a story recently with Bloomberg Tax about Tapestry in the US, just the profit that was being parked in tax havens and with no staff and with no income, and the tax avoided was just enormous. So there is that side as well.
Obviously, with the mark, the key thing is integrity and maintaining that integrity, which must be incredibly challenging as well, to be able to walk that tightrope and obviously, ensure that you're shouting about the people who are doing good, but then also challenging in a considered way those people who are overtly or very obviously doing wrong in the sense of tax. Have you seen much evolution then over the years, both in terms of that avoidance and attempted evasion, but then also the desire to kind of converge towards a situation where there is a greater number of organizations that are paying their fair amount of tax?
I'd say that over the last decade, the couple of things that have stood out to me is that how the consideration of this has now started to go into the mainstream. And a lot of people see it as a big governance issue now. So, for example, institutional investors and asset managers will actually treat, if they see tax evasion or tax avoidance, really aggressive tax avoidance, the institutional investor will say to itself, well, if they're pushing the envelope on that, if they're right at the edge on that, what else are they on the edge of that I can't see? Many are actually increasingly seen as a proxy for broader corruption. So because it's so visible, because we do have accounting standards around tax that most large businesses have to follow, and it flushes the numbers out into the public domain in a way you never would with more general corruption and fraud. So the attitude of institutional investors and asset managers has changed, which is wonderful. And that in turn has changed the attitude of the politicians, because the politicians don't like to move in this area unless the finance community's got the back. And then the finance community has said, you know what, we want even more transparency. We don't want to just know what the number is that they pay in tax. We want it broken down in each country. So even only just this year in the United States, there's been, after an 8-year battle, a change in the accounting standards where now they have to break out any significant deviations on a country by country basis in their reporting accounts. And that was entirely driven by the finance community. And the reason we've got an equivalent of that in Europe, again, through the European Union, the finance community. So there's a self-interested relationship there. They're doing it for their own reasons. It's part of risk management. So very much a big governance issue. So that would be one thing I would say has changed. And secondly, I would say there has actually been a lot of improvements in the UK and Europe over the last decade. If you were to say to me how much tax avoidance is going on now in the UK and Europe versus 10 years ago, I would say there's been a marked reduction, a serious reduction. Even though there's still a lot out there, the size of the reduction is enormous. And many of the businesses we talk to, who are our accredited businesses, will say to us, and they're on the public record, and say, you know what, in my job 10 years ago, I was told to avoid tax. Now, we don't do that. Now, it's a rarer business that does it. So we've changed the background against which that which takes. And what that means is, in the UK, for example, and across much of the world, the contribution corporation tax makes is at something of a historical high. So right across the world, about 17% of all tax paid is just corporate income tax. In poorer parts of the world, it's much higher. You go to places like Africa, it's about 20%. It's even more important. So it is a big revenue generator, and that's crucial. The one deviation from that, I would say, is the United States over the last few years. The United States has tended to diverge recently with Europe over a whole variety of taxes under President Trump. So the news hasn't been as good in relation to the US as it's been in Europe and the UK. Jamie?
No, I was just going to say, like, you always used to that line, like, accountants used to sell tax avoidance, but now they sell tax compliance.
Yeah.
Their attitudes have changed as well completely. I think the narrative has shifted in the business community on this kind of thing. But yeah, the Africa thing's super, super important. And that's one of the things that keeps me interested and keeps me engaged in this line of work as well, because, in the past, it might have been an age thing. It might have been, because I was in the private sector, but it was all like me and mine and, our firm and us. But then as I've grown older and as I've come over to the Fair Tax Foundation and the work that we do, you realize how important responsible tax conduct is. And so, like I was saying, in some of these African countries, half of their revenues can be from corporate income tax. And so if a few businesses that are operating in that country just think, do you know what, we're going to be a little bit more aggressive, a little bit more artificial, maybe do a little bit more profit shifting this year to boost our profits, it can genuinely impact lives in that country. It can stop like clean sanitation and, childbirths and things like that. So it actually does impact lives, and to see that and to be a mover in a space that advocates for businesses doing the right thing is just brilliant.
Yeah, it's very heartening to hear that, at least in the UK and Europe, the things are going in the right direction. And yeah, as you say, maybe Africa and the African nations, the dependency on that corporate income tax really highlights the significance of it. Maybe it's not as significant in Europe and UK, but the ultimate role is highlighted as to what the difference means. And it's heartening to hear that. But obviously, with the US, it's unfortunate. And I read today that there's going to be legislation brought in whereby the people associated with shell companies don't have to be revealed.
Yes.
So they're just taking steps backwards. It's not like they're even just staying still. They're going backwards, it seems.
It's crazy to say this, but on many metrics, the US is now a tax haven and a secrecy jurisdiction, because in places like Delaware and various other states, you can literally hide from law authorities.
Right.
And that's insane. That is crazy. And let's see how it goes, because many times in the past, the US has led on clamping down on tax evasion and has led on financial transparency. So this is no way an anti-US rant, because in many times they've led the way. But in the last few years, there really has been a downturn, I think most people would say, in the appreciation of what's going on. But let's see which way the midterms go in November. It could very easily flip the other way again.
Yeah, absolutely. Okay, so taking a step back then, for someone who has never come across the Fair Tax Foundation, could you tell us a bit about what it does, who you are and what you do exactly, and a bit about the mark as well?
Yeah, so before we said, obviously the Fair Tax Mark is our bread and butter. The Fair Tax Mark is basically our stamp of approval that a business meets our criteria, and our criteria is built around responsible tax conduct, the attitude towards doing the right thing on tax, that being robustly governed throughout the business, whether it's, overseas or what, that it's governed robustly, responsibly throughout the business, and that it's being transparent with stakeholders about what tax it does pay, and if it doesn't pay headline rates of taxes, why, in an understandable way. So that's what the mark stands for. But we've got a whole load of other products that we do as well. We've got a benchmarking index, which any business can come along and see where they're at on their responsible tax journey. And they can measure themselves within, say, a sector or a country, and where they're performing and what they could or can't and need to do in order to improve going forward. So that's another separate product.
And that's a way for businesses to tippy toe into the agenda, to be honest, for some of them. For some of them, the thought of applying for a fair tax mark and sharing all their data with us, even though we've got a confidentiality agreement in place, is a bit, whoa, that's a bit much. But when you start talking about, and then they're worried about, what if they don't pass and they've applied, and what if it gets out, they applied and they didn't pass? It never would, but they worry about it. And so what the index does is it allows people to just benchmark themselves against the leadership cohort and take it from there. And one of the things Jamie makes sure he does when he's assessing businesses, we have different standards for different sizes of business, because what constitutes good is different depending on the size of the business, because you're operating against a different backdrop. So the way we would probably describe our standards is challenging but pragmatic. It's challenging standards that we apply in a very pragmatic way.
Yeah.
And we work with the business to get them to where they need to get to. We're not looking for perfection, but we are looking for, basically a substantive commitment on policy, governance, and transparency, and there to be no evidence of aggressive tax avoidance, which if we saw, we would quietly say to the clients, don't think this is for both of us. Let's go our separate ways. Neither of us has to talk about this matter again. Come back maybe when some of this stuff is resolved.
Yeah. And we've had many businesses. So what we do basically is we assess that business against our standards, or the right standard for that business, and we send them a scorecard report. And we've had many, heads of tax professionals that have said, my word, this report is just so valuable when we share it with our board, the intel that we get, because sometimes you can't see the wood for the trees, when you're in a business and you're doing things. And just something as simple as if a business does publish their country by country reporting, which is, the profits and taxes paid in each country, they're not necessarily thinking what the outsiders perceive our figures as, whereas we are. So we look at them figures and say, why is that high there, low there, what's going on there? And just that conversation could mean that they improve their reporting in a way so that it's more accessible to stakeholders. And they just say, like, this report is just so valuable. So we do a lot of the work in the background based on publicly available information, and we might ask the client a few questions, but basically from the client's perspective, they just engage with us. We go off for a couple of months, come back with a robust report, comprehensive report, and basically tell them exactly where they're performing really well, all the areas where they need to improve going forward, and what they need to do in order to be certified. And then we just work with the business then to make those adjustments and going forward. And there's many reasons why a business would get accredited with the fair tax mark, just absolutely loads. Sometimes it's good for staff morale. The tax teams always say to me, tax is one of those things that goes unnoticed until something goes wrong, and then it's like, oh, they never get recognized for all the good work that they do. And it is good work. It's really hard and difficult and complex and time pressured and deadline pressured. And so sometimes it's just a good shout to the tax team that they are doing the right thing, everything's in place, and the board and the investors can be assured, because they've been independently verified by us, that everything's A-OK. You know what I mean? And others are just like, sometimes they get it for procurement contracts, as it might be good for procurement contracts. Others might get it just to stand out in the sector. There's loads of reasons, isn't there? Yeah. So that's the fair tax mark. Like I say, we do the index as well. We've also got 64 in the UK councils, haven't we? Councils for fair tax. That collectively they've spent about 28 billion on procurement, and they would like to factor in responsible tax conduct into their decision making if they could. We do lots and lots of research. We've got reports and benchmarks and all things like KPI investors. Loads of asset managers and institutional investors have come to us over the years and said, look, you can do a detailed assessment. You work with clients, you ask them the questions behind the scenes, you get access to some data. Us as investors, how do we look at businesses quick and dirty and say, like, what's a red flag, what's a green flag, what questions should we be asking? So we've worked with asset managers and institutional investors and developing some KPIs there on our website. We've got our list of tax havens as well. We've got loads of resources on our website, and where we do lots of work. It's not just the fair tax mark, although that is our bread and butter, yeah.
It's amazing, all the work that you're doing and all the support to a wide range, not just corporations, but also, the councils, which I think is really interesting. Based on your experience, what has been the major barriers? You've mentioned some of them in terms of concern that if they don't meet the criteria, the consequences of that. Yeah. So what currently would be the biggest barriers to somebody reaching out to you and saying, we would like to move forward with this?
In the past, it was that we didn't have the ability to actually certify businesses in certain parts of the world because we didn't have a standard that allowed that to happen. And we've just very recently closed that final bit of our jigsaw with the launch of a standard, which means that we can even go for very small enterprises anywhere in the world. And we most recently certified our first business outside Europe, a social travel agent in Thailand. And that's the beginning of a whole new sector for us. So we were constrained in the past a little bit by our own holes in our own business plan, but that's very recently, as in the last couple of months, we've moved past that. I think the other thing is, it's this trust thing. I mean, you're asking a business to share with you the financial data, often before it's even published. And some of this is market sensitive information. So it takes a lot for them to, it takes a while to build up that trust with the client. And sometimes it needs them to see another couple of businesses in that sector have worked with us, and they go and quietly have a word with them and say, what would they like, and etc. And then they will come back to us. So we tend to start making advances in sectors en masse because they can all talk to one another and ask each other's advice. So financial services, we have a lot of activity. Utilities, energy, water, we have a lot of activity because and people move around in the sector, and they've got a fair tax mark in one company, and then they go to another company and they go, well, I want it for this company as well now. And we've had that happen a few times. So it's very much a person that they end up trusting as well as the brand. So I always say, if I can get Jamie and Greg in a room with someone, invariably they'll do a deal, because they will see once they're in the room that these guys are they're not head the balls, that they know the technical matters, they are driven, but they're also pragmatic, and that what we're all in this for is we want to celebrate excellence. and we really want to celebrate it. Sometimes we want to celebrate it more than the business itself, and we want to help them build a narrative to do that with. So sometimes you will have a business that's doing entirely the right thing, but they don't have an ability to narrate that, and so they shy away. So you'll have a business which is like, they're doing nothing wrong, but they've got a presence in some tax havens. And so the tax department know there's nothing wrong with it because it's legitimate, but the communications department will veto any discussion because it's tax havens. We mustn't talk about it. And that's partly because they don't know how to talk about it. So what we spend a lot of time doing is helping the tax department produce the story that allows them to tell that story and present it to their own communications department. So, for example, you're the cooperative group, you're in the Isle of Man. Isle of Man's a tax haven, but the reason you're in the Isle of Man is because you've got a shop there and you sell milk and eggs and bread to the local people. So, of course, it's entirely legitimate. And of course, you're going to have revenue and etc. And we have that with a lot of businesses. So we try to explain it's not about being in a tax haven, that's the wrong thing. It's about being in a tax haven artificially. Tax planning is fine. Tax avoidance isn't. Tax planning is where you are using tax reliefs entirely as they were intended. So many of us will put money into a pension, and we're encouraged to do that by the government. They want us to save for our futures, so they give us tax reliefs. We claim those tax reliefs. That's not tax avoidance. That's within both the letter and the spirit of the law. And you will have some people who are disingenuous, and they will try to say that if you ever invest in an ISA or you're a corporation, you claim a tax relief, that's tax avoidance. It really isn't. It really, really isn't. Tax avoidance is that stuff that's just stands out right in your face. You've got a massive profit parked in a tax haven, which there's 0% corporation tax. You've got no staff. You've got no assets. You've got no revenue. You are there to avoid tax. That is aggressive tax avoidance. That is an artificial presence. So we help businesses sometimes explain the legitimate reason to be in a tax haven. And that's becoming more and more important now, because as the law requires the hard data to go in the public domain, whether you like it or not, it becomes even more important for a business to be able to construct a narrative around that data.
There's now a discussion around, obviously, taxing the billionaires, because the disparity between rich and poor has just been getting obscene. So there is a greater degree of, more conversations around tax. Have you seen that have any sort of impact in terms of people coming to you saying, right, okay, we want to kind of inoculate ourselves or insulate ourselves from this and show that we are not a part of this. We are considering tax. We're paying our fair amount of tax. So have you seen that uplift in talk around taxing wealth and billionaires result in more people approaching you?
Certainly. And not just in the UK, I would say around Europe, and maybe the very beginnings of a conversation in the United States as well. So obviously corporation tax, does what it says on the tin. It's corporate, you're taxing corporate profits. Yeah. Most wealth taxes, as we refer to them, are about individuals and their wealth. So corporations, individuals, two separate silos, you may think, don't meet in the middle. It's not true, because the fact is that corporation tax is largely borne by the investors, and the investors largely are some of the better off in society, by and large. Corporation tax, most economic studies will show you, are not borne by the customers. They are not borne by the employees. They are borne by the investors. And so what that means is when businesses pay corporation tax, it's probably the most efficient way to deal with wealth inequality that exists. So there was a big study done in the United States recently where they looked at the tax captured by the top 100 richest people in the US. And they said the tax that they find the hardest to avoid, the tax that they're most likely to pay, is corporation tax through the businesses they own, whether that's Mark Zuckerberg or Jeff Bezos, etc. So one of the things that we always say is that getting corporation tax right is probably one of the biggest contributors to reducing inequality that you could do. Secondly, the numbers involved are normally very significant, often much larger than some of the numbers being talked about, the wealth taxes with income tax. And the other thing is, but there is a breaking point though. So as with any tax, if you make corporation tax too high, there is a point where you disincentivize people. And there is a point where somebody would there's no point. So there's a sweet spot. And what we need to do is all be aware the average rate of corporation tax in the world right now is about 21%. 25% in the US, if you include national and state, and 25% in the UK. So I think most people would agree that at that level, it is not a disincentive to investment or anything. But if you really did start going towards 50 and 75%, etc., then there's going to be a problem. So we always argue for a considered and non-emotional debate on this, fact-led, and we genuinely think like corporation tax is the most beautiful tax. We probably go over the top. For us, it's like the Sandra Bullock of taxes. Yeah. It's just perfect. So it really, because again, other taxes may raise more money, VAT in the UK or sales taxes in the US. But the beauty of corporation tax is it's a tax on profit. It's not a tax on revenue. It's not trying to tax activity. So if you make a loss, you don't pay corporation tax. Yeah. Only if you make a surplus do you pay corporation tax, and that's you giving back to society, the corporation giving back to society, because ultimately it needs society to thrive itself. But if you're not making a profit, you don't pay it because you're not in a position to. It's wonderful.
But then obviously big organizations have found ways and means to reduce the corporation tax that they are liable to pay. In terms of like internally selling services and things, I think Starbucks is a prime example that's been used in lots of different cases where they're carrying out transactions within their own kind of internal network of companies. Yeah. And through this means, they're able to say that in a particular country like the UK, they haven't actually generated any profits or they've actually made a loss, even though, you walk down every high street in the UK and you see a Starbucks, so how can that be?
And Apple's the perfect example of that. Apple actually created their business in a way that much of their income was stateless. It actually wasn't parked in any country in the world.
Right, okay.
It was stateless. And thankfully, the European Union took them on. Thankfully, the European had a big test case and they were forced to pay Ireland billions and millions after an enormous investigation because that was a ridiculous situation. So it really is an issue. I would say the worst excesses now do no longer take place, though. Apple couldn't do that now, and to a degree wouldn't want to, because the nature of the debates changed somewhat than what it was 10 years ago. So a combination of the law tightening things up, a combination of tax authorities being on it more, being more assertive than they were. And there were instances in the past where the law said they couldn't do things, but the tax authorities never really applied it. And everyone knew there was blind eyes being turned. So you've got to get the legislation right. You've got to get the implementation right. But I honestly think there has been some behaviour change as well. If you listen to professionals who are, at least in Europe, they will tell you that some of the conversations that took place 10 years ago, they would not be considered now. You would be told off in the office for something 10 years ago you would have been rewarded for.
One thing that you've been highlighting through the foundation is that it's not just the big organizations that need to be scrutinized and called out for their tax practices, but also small businesses as well. There's a culture, I'm not sure if it's limited to the UK, but of small businesses also potentially avoiding paying their fair amount of tax. Could you maybe share a bit about that?
So it was this man put me onto it, actually, because one of my motivations helping set up the Fair Tax Foundation way back when was largely multinationals avoiding tax, your Starbucks, your Apples, etc. And I was pretty ignorant to the degree to which small business tax avoidance was taking place. But Jamie, when he joined us, he would start telling me things such as, "Hey, have you heard about the SpongeBob plan, Paul?" I'm like, "What's the SpongeBob plan?" And he'd explain to me what the SpongeBob plan was and how small businesses would self-liquidate to avoid taxes and then recreate and self-liquidate. It's called phoenixing now. Really wasn't a term for it back then. So he made me very aware of this, and then we started to talk about it. And for a while, it was tumbleweed. Nobody really wanted to listen to what we had to say because it didn't fit the meme of big business bad, small business good. But it is now the case that in the UK's probably got the most in-depth analysis of who it is and isn't paying tax in the world. It's called a tax gap. And it is their own figures now say that 2/3 of the tax gap in the UK is not attributable to large multinationals, it's attributable to small business.
I don't know. This is one of those areas where I could talk all day about it, and I wouldn't want to. I wouldn't want to spend hours on it. But yeah, it's in my opinion. In my opinion, I always say, the aggressive at the large end, they're good at avoiding the taxes, but at the small end, that it's not even avoidance in many instances. It's damn right evasion. You know what I mean? And it's just the lack of communication between and the lack of regulation between Companies House and HMRC, and the scale of it. And because there's so many small businesses doing it, like, you can't just target one business because the reward wouldn't be much. It's the actual system that allows it to happen. And once a system works, it just spreads like wildfire, and everybody's onto it and everybody knows it. And you can go on Companies House and you can see it all the time. A company's created, it'll trade for 18 months without any accounts appearing. Then all of a sudden, it either files a set of dormant accounts when it's not really dormant, or it liquidates, basically. And just before it liquidates, another company set up, similar name, same people, all that kind of stuff. And so they've been trading for 18 months. They've not paid any VAT if there was VAT due. They've not been paying any business rates, maybe, if they're in a business property. The council might be chasing them, and then they just shut shop and start again. And then, they're chasing the business rather than the people behind the business and things like that. And this goes on and on and on. And there's loads of flags you can see for it. You can see directors that are linked with various companies, failed companies that have never really traded, or maybe only traded, one set of dormant accounts and folded and started again. I mean, you've got to ask yourself a question, why would a person legitimately set up a company, then close it, then set up another company, then close it, then set up another company, file dormant accounts, then close it, then set up what are they doing? Where's the money coming from? Why are they setting up all these businesses? What is the point? And so, like I said, I could talk about this all day, but there's flags there. I think HMRC now and Companies House are waking up to it.
Yeah.
And hopefully, we'll start seeing a crackdown on this kind of stuff.
I think the counter argument in the past was it's all small beer. The amount of tax that is being lost at an individual business level, it's so small we can't justify the time of the tax official to track it down. It's small beer. But the problem is, you add all those little things together, it's big beer. It's a massive glass of beer. And that's what HMRC's own tax gap analysis is now showing. And every year, the number goes up. And every year, the percentage attributable to small business goes up as well. So they have woken up now. They have definitely woken up. And I think part of the reason they've woken up, though, is it's become something that's very visible on the high streets, because the lack of policing and the poor sanctions, if you're caught, which is very unlikely, if you're caught, they say you can't be a director for a couple of years of a company.
It's an incentive, isn't it?
That's the sanction. Yeah. That's not a sanction. You've left behind hundreds of thousands and maybe even millions of debts to other businesses, to the council, to the National Tax Authority, etc. It's not a sanction.
Yeah.
So, and because it's now on the high street with the talk of the vape shops and the barber shops, etc., and the candy stores, it's so in people's faces that what we've been arguing is there's a real danger if it's not dealt with. Tax morale across the entire country could be challenged, by which I mean people are saying, well, if they're not paying their taxes, I'm not. And the UK to date has generally had a very good level of tax compliance, voluntary tax compliance. But that gets to the point where if you think nobody's paying it, you don't pay it. And some of that exists in the US right now. And I would say, for example, the level of tax compliance you see in the US is very different to Europe. Just the whole approach, you got President Trump, outwardly saying people who pay taxes are stupid. You couldn't say that in Europe, or until very recently, you couldn't. And it'd be acceptable. So it is a thin line, and touch wood, the last few months, we've seen some real grasping of that, and sanctions being improved, policing having more resources, and a much more serious take. We still don't think it's enough. We think the line is so low at the bottom. There is certainly in the UK tens and tens of thousands of fraudulent companies, if not probably hundreds of thousands. So the person who led Companies House a couple of years ago actually said it is probable there's somewhere between 200,000 and 300,000 fraudulent companies on the business register of the UK.
Wow. Okay.
And it was a throwaway remark. It was like, that should be, they should have resigned as soon as they said that thing. But no, it was like, well, it's just a fact. That's what we have to live with. Because the truth is, in the UK, it's just ridiculously easy to set up a company and shut down a company. The UK is obsessed with allowing anyone to set up a company in 24 hours. I can't get a library book out. I have to get cleared before I can join a library and provide also. You can have a company in 24 hours and then you get limited liability, which means any debts you build up, they're not yours to the companies. That's an enormous privilege. And you're paying what, 100 quid for that? Ridiculous.
Yeah. And like you said, the sanctions is terrible because even if they do get caught, which is a massive if because it's widespread, say they are banned for a director, they just get a nominee director. You get the brother or the friend or something, and they're really still controlling the strings behind the scenes, taking all the money and closing it and stuff. Like, it's just, yeah, it is a big problem. But, touch wood, we're onto it.
Yeah, we get a bit emotive on this one.
But what about the wider culture then? What needs to shift because you've said it's becoming more visible. People might reach that tipping point whereby they feel, okay, sod it. If they're not, then I'm not. But obviously there are clearly people who are already there who have reached that tipping point and because they see the big corporations, because they see celebrities, they see all these big, powerful people who are leading an amazingly privileged life, and they're not paying their fair share. And people are suffering and struggling to put food on the table. And so you can understand why people might think, well, sod this, So that culture is there and it's being amplified by things like social media. And like, what do you feel can be done and needs to be done to alter and to change the narrative and to alter the underlying culture that has been festering away over the years?
So I'd say two things. One is we are winning. So the first thing sometimes to do is when you're winning, know when you're winning, because otherwise you can't celebrate your victories. So the amount of, just say, corporation tax that is paid now in the UK is about 100 billion per annum. It's virtually doubled in a decade. It is upwards. It's, as a contributor, it's up. And corporation tax used to be 19% in the UK, and it was one of the bottom of the G20 major nations. I think the only people who had anything lower were Saudi Arabia and Russia. But now we're up there on the average of the G7 because it's gone from 19% to 25%. And many of the tax loopholes that used to exist have been closed. So we have made massive inroads. And in many ways we are winning. Corporation tax is now higher in the UK than it is in the whole Scandinavia. And we always put Scandinavia up as the model, don't we, of social progression. It's higher in the UK. Businesses in the UK are making a high contribution. So that is to be celebrated. And the way forward is to be celebrated. We genuinely think that the one thing I would always point out, which is why it's really important that we don't fall into this tired meme of big business bad, small business good, is there are many people in big business who are absolutely furious about some of the abuses they say taking place, both for other businesses and of individuals who avoid tax. I promise you, there are some of the angriest people out there in terms of because they know they're doing the right thing and their colleagues, and it matters to them that they're doing the right thing. And then they get tarnished. That, they go home and their children are challenging them or their wives or husbands are challenging them and saying, oh, just seen your thing on the news and you're not doing this. And they know it's not true. So there's some of the people who are our biggest supporters and want to change the playing field. But I genuinely think 10 years ago, you couldn't talk about corporation tax in any meaningful way. No one was interested until we started to come along. And I would say 5 years ago, you couldn't talk about wealth taxes. Anyone who talked about wealth taxes were considered to be an absolute crank living in Narnia. It was not possible. And now look about the level of debate we're seeing on both sides of the Atlantic. So people still want to do the right thing. They want to do the right thing, but they need to know their neighbours are. And so I think some of the key initiatives we've seen from this new incoming government, but also the last government was waking up to it, is the new government is just pledged to hire 5,000 more tax compliance officers, for example, to clamp down. That counts. That they've created powers that might seem ridiculous, but that the police and Companies House and HMRC are allowed to share information. Before, they weren't even allowed to share information. It's incredible.
Right. Okay.
They needed the law to be changed so that they could share the information. The sanctions need to be increased. So one of the things we're quite passionate about is that if an individual is a serial abuser of setting up corporations in the UK and consistently leaving debts behind to other businesses and individuals, as well as tax not paid, they should personally be liable for the debts, not the business. The limited liability should be removed, and their house should be in play. Their car should be in play in terms of an asset that could be sequestered. Because otherwise, when we've done some of our work around small business, it's when the individual reaches out to you and says, "Oh yeah, I commissioned somebody to do some building work on my house, and I gave them the money, and they just disappeared. And I can see them down the road now with a slightly different logo, and it's the same business, but I'll never get my debt back because they were a serial abuser." And they're the human stories that matter. So we think things are getting better. We're all holding politicians' feet to the fire much better than we did before. And there's much to celebrate, I would say.
Yeah, again, when I was younger, everyone used to say like, "Oh, don't shop with a big business, shop local, give to your local," and all this kind of stuff. But then again, as I've got older and I've seen more and more companies, big and small, there's a lot of big businesses are subject to tight regulations and stuff, and they are doing the right thing, like Paul says. And there's a lot of small businesses that are doing cash in and folding companies, flipping companies. So to be honest, now I think actually, are they fair tax accredited? Have they got some ethical credentials? Can I measure them? And I'll drive. If that's a big business, then fine. Do you know what I mean? It's not this big business bad, small business good. There's good and bad on both sides.
Yes,
definitely.
Yeah, like I suppose ultimately it boils down to the individuals, isn't it?
Yes.
And within small companies, it can be the sole director who's the person who's carrying this out, and the serial abuser, and it might just be that one individual. And whereas within a big company, you have a lot more people, and therefore a lot greater potential for individuals who are willing to bend the rules or to pursue tax avoidance for the sake of profit maximization and shareholder payouts and things like that. So yeah, ultimately it boils down to the individuals rather than the company itself. But then within bigger companies, again, it's about the culture that exists and what's nurtured within that. So I absolutely agree that you can't just think that small companies are good simply because they're small. It really is that they can do damage and have real world consequences in similar ways to the big corporations, but ultimately it boils down to the individuals behind it all.
Just for example, so small businesses, it's like the Wild West in a way. If you can open a company and not effectively have to file anything and close it, you can do basically what you want. And especially if you just get a bit of a slap on the wrist or not even spoken to anyway, whereas, some big businesses would have to publish what's called a tax strategy. So they have to publicly list what their tax morale is, their attitude to tax planning, what they consider as tax risk, how they mitigate it, etc., etc. And that must be robustly governed through the business. And then many big businesses have a direct contact with someone at HMRC, and they discuss every say 3 years or something, like what's happened, what's my risk, how have I mitigated it, what's my risk register. And they have to have this contact with HMRC, and HMRC mark them off as low, medium, high risk businesses, and they've got to work to get it to low. So these big businesses nowadays are more subject, especially in the UK and in Europe, to stricter regulations. And I think all that combined with everything else is, like you say, it's shifted the narrative on we need to do the right thing, we need to be compliant. Yes, some businesses will push the boundaries as far as they can, and that's why we say aggressive artificial tax avoidance and stuff. They're not necessarily breaking the letter of the law, but the spirit. Well, that's why, the fair tax mark's so valuable, because, we can say that this business isn't doing that, and celebrate that.
Yep, absolutely. But yeah, I think having something in place whereby serial abusers, even after maybe the second time, where they become liable for the debts, I think that would pretty much stop it in its tracks.
Yeah,
No, I think be
really
incredibly effective. Yeah. And that's the way, top-down legislation can have really significant impacts overnight if it's done properly. I think that's one example that it could have an incredibly positive impact if that was just introduced overnight.
Yeah, we're not talking about genuine small business pioneers, many of which go to the wall just for natural reasons because people try their best and it just didn't work. We're not talking about those individuals. We're not even talking about people who serially have failed businesses because that's just the way the world works sometimes.
Yeah.
We're talking about the people. It's very, very obvious that they have no intention, even as they've set up the business, it's their intention to shut it within 18 months.
Yeah.
Yeah, and it's they take the assets with them but leave the debts behind. And it's the same people, often in the same building, and they'll just change one of maybe they'll move the comma on the fascia or in the business name and the fascia. And the other thing is a bit, you've got to look at the arm of organised crime. There is, for example, most VAT avoidance in Europe is linked to organised crime through things such as carousel fraud. And we're seeing that also sometimes what we think of as small business tax avoidance isn't really that. It's a network of individuals who serially set these businesses up. It's like a machine. And they will move city to city and town to town and look to abuse it. So stories recently broke about some people who've been exposed in London for a series of candy shops, Oxford Road, etc. It became very topical to discuss it. Well, maybe it got a little bit noisy in London and there was too much attention. So where did they pop up? Edinburgh. Same people, same shadow directors, same type of business, same business model. And now that, and then they'll get, the heat's on. Edinburgh Council's been now talking to Westminster, so they clamp down. They'll pop up somewhere else. But it's the sanctions.
Yeah, absolutely. And so you mentioned that recently the first business in the world awarded the fair tax mark under the foundation's new standard was the travel company in Thailand. And they actually got in touch with you before the standard existed. Could you maybe share a bit about that? And also just, are you seeing more and more organizations from overseas reach out to you and equally wanting to pursue this accreditation and be seen to be paying their fair tax?
Well, this is very much Jamie.
Yeah. Well, basically, we started in the UK, didn't we? Assessing UK-based businesses, whether they was, just UK only or multinationals, but, headquartered in the UK. And then I think in 2021, we launched our global multinational standard, which allowed us to certify multinationals wherever they are in the world. Yeah. But since then, we've been getting, various inquiries from different just single operating companies in a country saying like, this would be great for me. I want to prove that I'm paying my fair taxes. I want to shout about it. We've paid X amount. We want to be able to demonstrate that we're doing the right thing and stuff. But we didn't necessarily have a standard for these because we'd had one for the UK and then this one for global multinationals, but not single country outside of the UK. So that's what that was about. And then with Tripseed, they approached us and they were just, I can't speak highly enough of Tripseed. They're just a really, really responsible, brilliant company. They almost give us enough oomph and want that we was like, do you know what? There's that market out there. There's businesses all over the world. It's not just big multinationals that want this. There's loads of companies all over the world that want to prove and shout what they pay. And so we created that standard for Tripseed. And we Tripseed were part of that process, and we launched it with Tripseed, and it went really well, yeah.
And one of the really interesting things about Tripseed is the bit of our standard they like the most about the fair tax mark is that it wasn't the bit about having a tax policy and paying the right amount of tax or discussing your taxes in a public way. It's that the owners of the business had to be clearing in the public domain. And you might think, well, what's that got to do with tax? Well, it's called beneficial ownership disclosure of the people who've got the most significant control. But why it mattered to Tripseed in Thailand, there's a rule, which is that X amount of the business needs to be owned by a local person from that country in the tourism sector, because it's such a big part of their economy and they want to keep a lot of the jobs and the money flowing within the indigenous population, all reasonable. But there's an enormous problem in Thailand for people who exploit and overseas people who pretend through shadow directors that they are legitimate to pay people. And so it's like the shadow director thing we discussed before in reverse. So what was keen for Trixie is that the fair tax mark was very, very clear that unless the beneficial owners are in the public domain, that you can't get the fair tax mark. So that was really appealing to them, and that's what's interesting sometimes, that it's a particular bit of the standard appeals to a business because of what's going on in their sector. And sometimes we've got like online businesses, like Friendly Soap, small online business based up in the Pennines, and most of their sales are online, not through bricks and mortar retail. So it really matters to them that online platforms, they're on a level playing field with the other businesses that work through online platforms, and that if they're charging VAT, everybody's charging VAT. Yet we know that many businesses don't, because this is poorly policed by Amazon and Shein and Temu. So for them, it was, what really appeals to them is that we are there and we are talking about these things and active. We just want a level playing field for business to compete on. And we want all businesses to make a fair tax contribution, because otherwise the businesses who are paying their way, they're disadvantaged. Let's be honest, they are disadvantaged compared to another business that doesn't have the same overheads. Yeah. And so we feel it's incumbent on us to speak up for them as well.
Yeah, the disadvantage of doing the right thing.
Yeah, well, I suppose like what it represents is ultimately that you're doing right by the community, actually, because by paying a fair amount of tax, then it means that you are contributing fairly to the community from which you are taking as well. So you're giving back, and so it'd be great if instead of funding football groups and things like that, it actually did something like the fair tax mark and got that, and that would be a far greater indication that they actually cared about their communities and that they wanted to give back to the communities than supporting these groups and just putting their branding on these things.
And there are people out there so passionate, like James Timpson at Timpson's and Julian Richer at Richer Sounds, and Lush and Mark Constantine. They are passionate about that their businesses pay the right amount of tax, and they tell their tax directors, don't you get up to any funny stuff. I want to pay my fair way. And we've even had tax directors come up to us and say they were astonished when they joined certain fair tax mark companies, because in their other lives, they've been told go for what you can get away with. And then they come into a fair tax mark company and they're told, no, we stick by the letter and the spirit of the law. We've had heads of tax tell us they've joined certain fair tax mark businesses because they are fair tax mark certified, because that's how they want to live their lives. So it's, without over labouring the point, there are many tax professionals out there, it's not just Jamie, who want to do the right thing and do it in the right context. And obviously that doesn't mean you're not paying taxes that aren't due. That's philanthropy, that's charity. Yeah. But if the taxes are due, you pay them.
Yeah, it's understanding that companies, it's changing that culture, and instead of companies being run for profit maximization, which ultimately is extractive, it's about running them as part of the community, that they are part of it, and therefore they should be good citizens by paying their fair amount of tax. But just a couple of questions to wrap up. I would like to also celebrate the way that the Fair Tax Foundation is actually structured and how you function, because you're registered as a company benefit society with rules that lock any surplus that you make into the mission. And could you maybe explain why you've taken that form and how that functions?
In the past, in different areas of accreditation, sometimes accreditation schemes would be very successful and they would become a target for large accountancy and legal firms to acquire, because there's money to be made. And we were very keen from day one, anticipating that we would be successful, that there was a disincentive to that, to anyone who might want to acquire us, because basically any surpluses can only be spent on our mission, which is the advance of tax justice in the concept of corporates. So there's no opportunity for an outsider to profit maximize, or there's no proper. Let's say I thought, there's a load of money to be made. I'm going to make a load of money as a chief exec and pay myself bonuses. I don't get to do that, because the mission is there. So it was designed to protect us. It was designed to give some reassurance to some grant-making bodies that wanted to put money in, but probably wouldn't have put money into a wholly commercial enterprise. Equally, we didn't want to go full charity in being established, because the founders, myself included, we feel that there's something. The fact that we're a commercial organisation and we license the fair tax mark and we charge a fee and we charge for our assessments, it brings a drive in the team that we think is really important, because it's business to business. And we largely recruit from the business sector, not the charity sector, because the outlook is very much understanding of, we have targets, we have income, we have costs. At the end of the day, we've got to be a viable enterprise. So what's nice about a community benefit society, it's like a hybrid. It's somewhere between a charity and a full-on for-profit. We're a commercial not-for-profit.
So just to wrap up then, if someone took one thing away from the work that you do and the conversation that we've had today, what would you want it to be?
It sounds almost boring, but treat every business on its merits. And if a business is, an individual is championing the right issues in some way, that's what matters the most. Of course, they have to be able to back it up. And I'm going to throw another one in, because that was probably a bit uninspiring. Probably that public discourse can change if enough of us are willing to talk about the issues and not assume that these things are impossible because the world isn't perfect. Because only by a group, the world only changes when a small group of people just to say enough's enough. And there is a truth to that. And we started off when we began, literally it was a few people in a pub going, flipping out, why does nobody treat tax as a serious issue? And why is everybody scared of it? And why are we only letting tax people talk about tax? It's that, like, you get together and you say, you know what, the next morning, you don't forget about the conversation. You actually pick it up and run with it. You got to bail me out, because both of mine were a bit rubbish, I think.
No, I think if you really want to know how a business truly operates behind the scenes, whether a business is good or bad, you need to look at its taxes. I think tax is one of the best indicators you can have of whether a business is doing the right thing or not doing the right thing, whether it's being responsible or not being responsible. And so both from the outside, the public's perspective, to look at tax, but also inside, if you're a board director or someone inside the organisation high up and there's bad things going on with tax, I would be thinking, what is going on here? We need to sort our tax conduct and governance and communications out here, because it doesn't look good. It doesn't look good. So I would say, look at tax. Tax should be a main thing that people should look at.
Yeah, because ultimately, internally, it represents the culture. Externally, it represents how the company is engaging with their community, whether it's extractive or whether it's cooperative and collaborative and giving back. Well, thank you so much for your time. I really appreciate it. And taking the time to talk to me. It's really heartening to know about all the work that you're doing, and just so incredibly comprehensive and incredibly impactful. It is an area that has been neglected, as you say, but has so much potential for positive impact on so many different levels. So yeah, it's really amazing and really inspiring, the work that you're doing.
Thank you, Chris. I've had fun. If you do one of these things and at the end you think I've had a bit of fun there, then that's a good thing. So thank you for that. Thank you for your interest.
Yeah, thank you.
I hope you enjoyed this episode. Everything Paul, Jamie and I discussed is in the show notes, and you'll find this episode and the full archive at content.changingthenarrative.media, where you can also become a member and sign up for the newsletter. Please share, comment and subscribe wherever you listen to this podcast, so more people can learn about the alternative ways we can build our systems. If you would like to support the podcast and Changing the Narrative, then please consider becoming a paying member. New episodes of the Changing the Narrative podcast are available every second Tuesday. Thanks for listening.